Sometimes a financial emergency can arise when you least expect it and can land you in a cash crunch. Online payday loans offer the best alternative when it comes to managing your emergency expenses that occur between your paychecks. If you are looking to access the best, small payday loans online no credit check, you can get quick, convenient, and safe online payday loans to help you overcome your cash crisis until your next payday. Small payday loans are an ideal solution for individuals who need quick cash to cover unexpected expenses or bridge the gap between paychecks. Whether you have no credit or bad credit, you can still qualify for small payday loans online with no credit check. This bad credit loans makes guaranteed personal loans the application process quick and hassle-free, so you can get the money you need in a matter of minutes. One of the biggest benefits of small payday loans is their flexibility. You can use the money for any purpose, from paying bills to covering emergency expenses or making a much-needed purchase. With small online payday loans, you don't have to worry about the embarrassment of asking family or friends for money or going through a long and complicated application process at a traditional bank. Applying for small payday loans online is also a great way to improve your credit score. By making timely payments on your bad credit loans guaranteed approval, you can demonstrate to lenders that you are a responsible loans for bad credit instant approval borrower. Number 1. OneMain Financial. This provides personal loans to borrowers with fair to poor credit. While the average loan size tends to be small, borrowers who might not qualify at other online lenders or brick-and-mortar banks may find it easier to be approved for a loan through OneMain. Personal loans from OneMain Financial provide borrowers with the option of taking out a secured personal loan. In exchange for collateral, such as providing the title to your car, you might qualify for a higher personal loan amount or a lower interest rate compared to an unsecured loan. This can be a useful borrowing option for borrowers with bad credit who would otherwise not be eligible for an unsecured personal loan or a loan through a traditional lender. As a OneMain Financial personal loan borrower, you can request to change your monthly due date, which comes in handy when your financial situation changes. For example, if your new employer has a different payroll schedule. You can request a payment due date change up to 2 times throughout your entire loan term. However, you must have already made your first loan payment on the account, and the account can't be 10 or more days past due. The request also can't be placed within a 12-month period as a prior payment date change request, and your preferred payment date must be within 15 days of your original payment date. Number 2. LoanDepot. LoanDepot was founded in 2010 and has quickly become one of the biggest names in the mortgage market, funding $275 billion in purchases and refinances since then. The lender offers an end-to-end digital process, dubbed Mello Smart Loan, but you can also get in-person assistance at more than 200 branches across the US. Notably, LoanDepot claims it can beat industry average closing times by 50%. The lender has closed loans in as few as 7 days, but the typical timeline is 30 days, 45 or 60 days. LoanDepot's Grand Slam package offers up to $7,000 back at closing if you work with an affiliated real estate agent and meet other qualifying criteria. LoanDepot is best suited for borrowers who are looking for an expedited closing process, a wide variety of loan options, and the flexibility of both online and in-person support. LoanDepot employs a streamlined online platform to collect all of your application documents. The Mello Smart Loan platform is designed to verify all of your documentation and credit reporting in around 7 minutes. Not all borrowers are eligible to use the tool, however, and facilitate a paperless process. Number 3. Lem. If you're an adventurous investor, you've probably already considered peer-to-peer, P2P lending platforms. Popular platforms like Lending Club, Prosper, and many others have made personal lending easier than ever. But what if you could combine anonymous P2P lending with specific knowledge about a borrower? Would you be more willing to spot an actual friend or a stranger $500 with an interest rate? Lem, a new P2P lending app, is helping investors connect their investing with their social life using social media. Should you start investing through Lem? We'll explain how it works and the risks that investors take. To start using Lem, you'll simply download the app from the App Store or the Google Play Store. Then, you can fill out your profile and start browsing loan requests. Loan requests include information about the borrower, including the loan amount and payment period they're seeking. Len also gives each borrower a credit risk score. The credit risk score is either blue, friend or family member using your Facebook profile, green, strong credit background, orange, moderate risk, or red, high risk. Borrowers can request loans up to $5,000. When you see a loan that makes sense, you can offer an interest rate and payback period. You have to fund the entire loan to be an investor. The loan requester can choose to accept or decline your loan offer. If they accept, you'll fund the loan using ACH payment processor, Dwolla. Len facilitates the loan transaction, including collecting payments and late fees of $10 if necessary, and pursuing collections efforts or reporting delinquent payments to the credit bureaus. All payments to you will be processed through Dwolla. Using Len to lend to family and friends makes a lot of sense. If you're going to lend to them anyhow, you may as well use a low-cost platform that makes collecting the loan easier and more official. However, Len forces you to figure out what interest rate and repayment terms make sense for the borrower in question. I think the average investor will end up offering too many low-interest loans, and the default rates on the loans will lead to lost money.